What's up, guys? Monetary recap back at it again with the no nonsense, straight into it, and let's get straight into it. So, we made a previous call months prior, back in March, that we were talking about how Tesla was finding a nice support. Especially, we talked about it at 700. We talked about it at 750, not exactly on the dot, but we had mentioned previously of it that these levels were key and that we had put it on the radar. And so now what is happening here is that we are retesting it now. So what we have on the current chart right now in the blue is our resistance lines. These are what we have to break through in order to get back up into the money zone, that I like to call it, where everyone is happy, wherever euphoria is. All right, so the MACD has turned red, which is, it's not that bad. It's not the worst. We had a lot more red in previous months prior, since the all-time local high. The one thing that is a little nerve-wracking is that we are not making a new all-time high each time. We are actually making a lower all-time high each time. So if you have been buying Tesla for the last 6 months, you would have been down 30%, which it's tough to bear in a stock market because you now need to be up double that to be in profit. So if you're down 30%, you need to be up 60% just to be breaking even and then be in profit. Now, if you've been buying Tesla for a year, you're up 23%. Now, for the 5 years holders, they're sitting pretty. All-time high holders, they're sitting pretty, But these people have been holding through massive dips. And, there's a flip coin to it. Yes, you lose out on short-term profit, but long-term gains are significant. You don't have to pay taxes on them, and they're usually much more. One, they're easier to come into because they're less stressful. You don't have to worry about your position all the time. If you have a price horizon, right, and you think, okay, I'm going to sell this stock at $60, you're going to be trying to time it, right? If you have a long time horizon, instead of a price, but just a long time horizon, you believe in this company for 10 years, it's almost too broad, well, no one knows what Tesla's going to be doing in 10 years, right? But I think if you combine those two things, I think you can have the perfect thing. If Tesla hits $2,000 tomorrow, I'll sell some of my shares, obviously. But, if Tesla hits $2,000 in 5 years, it may be different, So if you add these two things together, just like when you add indicators, it's pretty fundamental. So some of the levels that we should look out for when we put this Fibonacci retracement level on, if we go from the all-time high, that true all-time high, to the local bottom, which is also heavily influenced by current market relations. Now, the positive note is we back tested the red Fibonacci level at almost sub 800. 823 is pretty good. If anyone got in there, you are sitting pretty prime, ready for the next bull run. S&P and the Tesla are key. They're like in a marriage together, whether they want to be or not. And Elon Musk's antics, whether you like them, whether you don't like them, don't necessarily help. He sold a lot of stock. He sold about, he sold like less than 10% of stock, so it wasn't really that much. But it's still something concerning for the average investors. Usually you want to see institutions buying. They only buy for one reason. They can sell for multiple reasons, whether it be good or bad. You will never really know as as a retail investor. Only the institutions really know. So we back tested the red Fibonacci level. We rejected the green Fibonacci. Well, let me give you specifics. We back tested 0.23, right? We rejected 0.38. Now, what I think may happen is we are sitting pretty in the middle of it. Depending on what futures are later tonight, we will release a video about the futures and possibly what may happen at market open. We'll try to release a video before market open tomorrow about what we think may happen. Pre-market trading is looking hopefully very strong. The tensions haven't really been rising as much in Russia. There's not really that many news stories, and there's not the leak of the Wuhan and all that happening in Xinjiang or in the provinces. If I butchered that, I apologize. But what I personally think is if we can quell the fears and some of the earnings can be positive. I mean, Amazon took a complete beating. We're definitely going to be releasing a video on that. They took a complete beating. Twitter didn't really have insane earnings. So, I think Elon Musk is getting very brazen with his investments. Bitcoin was one thing. Bitcoin has fundamentals to it, and that sounds so wildish compared to Twitter. But, Twitter, look at the workforce it had beforehand. Look at the productivity that it had beforehand. It wasn't that key. So what I think personally with Tesla is there's a lot of scared retail investors and institutions. They have to rebalance. If Tesla crashes, they can't dollar cost average like your average Joe can, or your average diehard Elon fanboy can. There's a difference between a mutual fund and the S&P and all this stuff. There's a lot of regulations that go into it. It's not the Wild West like crypto market where you can DCA into your 60% negative portfolio, and your mom's not going to ask you for your credit card loan back. So it's like, the stock market's a different game. But what I think could happen is, if we look at the stock RSI, yes, it topped out, which is not good. But the all-time high, we were at a complete high. When we made this local high in January of this year, we were at a very low bottom at the stock RSI on the weekly. Now we made our local all-time high, we kind of got rejected, which kind of sucks. But if we look on the daily, we're flattened out on the stock RSI, and on the daily RSI itself, like the normal one, not the stock RSI, we're making a new higher low, which is usually very good times to put a stock on your watch list and consider adding to your position if your dollar cost average is above the stock price. But also, if your dollar cost average is below the stock price, you can always add into a position when the stock is red. That is much more efficient than it would be to add on to Tesla on a day that it's up 3%. You may be more inclined, you think, oh, if Tesla's up 7% on a day, you're going to think two things. You're going to think, one, I wish I bought more, and second, I'm going to buy more, right? But when it's down 3%, you're going to be like, damn, man, I wish I would have sold at $7, right? But then, what you should do is you should add. So then when it's down 3% on a day, right, you add to your position, right? And then it goes up 10% the next week. You're going to be so happy you added on 3% discount. It's a discount. It's a sale. It's not a negative thing. It is a sale. So this has been Monetary Recap, guys. I hope you enjoyed the video. Like, comment, subscribe, and share. Make sure you check out our Discord. Links will be in the description. Check the referral. You can get up to 3 free stocks worth up to $500. Have a good day. Enjoy yourselves. Make a lot of money. And look out for our next video on the S&P 500 that should hopefully be coming out tomorrow morning. Have a nice night.